What does China know that you don't? And while you were watching the news, China dumped over $500 billion in US debt and replaced it with something the government desperately doesn't want you paying attention to. This is the same pattern that happened right before every major currency collapse in history. I tracked the exact months the countries following China's lead, the assets they're stockpiling instead. Subscribe now and watch until the end, because the timeline I'm about to reveal proves this isn't theory. Like this video to support the channel, the evidence is about to get disturbing. The drawdown started quietly in 2013. China held over $1.3 trillion in US Treasury bonds. By 2024, that number dropped below $800 billion. That's more than half $1 trillion sold off. But here's the anomaly. The selling wasn't steady. It accelerated sharply after 2022. In some months, China dumped over $20 billion in bonds, levels not seen since the 2008 financial crisis. This wasn't panic. The pattern shows discipline, strategic timing. They sold during market strength, avoiding suspicion. Historically, creditor nations reduce holdings slowly to avoid destabilizing their own reserves. China broke that rule. The speed suggests urgency, a countdown most analysts won't acknowledge. Compare this to Japan, America's other major creditor. Tokyo reduced holdings by just 10% in the same period. Beijing's pace is 4 times faster. The question investigators avoid: what deadline is China working toward? And why now, when geopolitical tensions are already boiling? The timeline reveals intention. The data hides nothing. The arrangement began in 2001. China joined the World Trade Organization, factories multiplied, exports exploded, dollars flooded into Beijing. But China faced a problem. Too many dollars could strengthen their currency. That would kill their export advantage. So they recycled those dollars into US Treasury bonds. Think of it like a loop. America bought Chinese goods. China took those dollars and lent them back to America. Both sides benefited. Both sides became trapped. This pattern echoed Britain and America in the 1940s. Creditor and debtor locked together until the relationship broke. Here's the irregularity. By 2010, China held more American debt than any nation in history. One country controlling that much leverage over another had no modern precedent. The bargain required trust. It required stability. Neither exists today. Trade wars started in 2018. Sanctions followed. Taiwan tensions escalated. The foundation cracked. The open question remains, was this partnership ever meant to last? Or did Beijing always plan an exit? The origins explain the unraveling. Selling $500 billion in bonds should shake markets. Yet Treasury prices didn't collapse. Interest rates didn't spike overnight. Why? The answer lies in how China sells. They don't dump everything at once. That would crash their remaining holdings. Instead, they let bonds mature naturally. Others they sell quietly through intermediaries. It's like draining a lake through underground tunnels. The water level drops, but observers see only calm surface. This mirrors Russia's strategy before 2018. Moscow reduced treasury holdings from $96 billion to under $4 billion. Nobody noticed until it was done. The anomaly here is timing. China sells when the Federal Reserve buys. Their exits hide inside America's own monetary expansion. Coincidence seems unlikely. Historical patterns show this delay is dangerous. When Britain abandoned the gold standard in 1931, markets reacted 6 months late. The damage was already locked in. The structural question persists. Is the real impact simply delayed? And when it arrives, will anyone see it coming? The mechanics work until they don't. China sells. Someone buys. But who? Treasury data reveals a strange category growing fast. Other buyers. These include hedge funds, offshore accounts, and undisclosed foreign entities. Tracing their identities proves difficult. Here's the red flag. A growing share of U.S. debt now sits with the Federal Reserve itself. In 2008, the Fed held $500 billion in treasuries. By 2024, that number exceeded $5 trillion. Think of it like a restaurant reviewing its own food. The credibility disappears. This pattern echoes Japan in the 1990s. Their central bank absorbed government debt when foreign buyers retreated. Decades of stagnation followed. Meanwhile, traditional allies show hesitation. European central banks aren't increasing holdings. Middle Eastern sovereign funds stay cautious. The enthusiasm from 2010 has vanished. The deeper question emerges: if the world's largest economies doubt U.S. debt, who truly believes in it? Just as earlier signals revealed China's exit strategy, buyer data exposes declining global confidence. The mystery buyers may simply be America buying its own promises. China isn't just selling, they're buying aggressively, but not dollars. Gold purchases hit records. Beijing added 225 tons in 2023 alone. Their official reserves now exceed 2,200 tons. Unofficially, estimates suggest double that amount. The yuan internationalization accelerates. Saudi Arabia accepts yuan for oil. Russia trades gas in yuan. Brazil settles agricultural deals without dollars. This mirrors the 1960s when France's Charles de Gaulle converted dollars to gold. He saw America's weakness before others did. Here's the anomaly. China launched CIPS, their version of SWIFT, in 2015. Transaction volume stayed small for years. Since 2022, it exploded by 80%. They're building infrastructure for a world without dollar dependency. Digital yuan trials span 260 million users. Cross-border payment corridors bypass Western banks entirely. The pattern is unmistakable. Every asset China accumulates cannot be frozen by Washington, cannot be sanctioned, cannot be seized. The open question haunts analysts. Is China preparing for economic separation or economic war? Their purchases reveal the answer. China isn't alone. The pattern spreads across continents. Saudi Arabia reduced US Treasury holdings by 41% since 2020. Brazil cut positions by 20%. India, traditionally America's partner, quietly trimmed exposure. BRICS nations move in coordination. Their combined Treasury holdings dropped $300 billion in 3 years. That's not coincidence, that's strategy. This echoes 1971 when European nations demanded gold for dollars simultaneously. Nixon closed the gold window days later. The system broke overnight. The irregularity deepens. Nations aren't just selling treasuries, they're stockpiling gold together. Central banks bought 1,136 tons in 2022, the highest since 1967. Even Japan, America's most loyal creditor, shows cracks. Tokyo sold $70 billion in bonds last year, their largest reduction ever. When your closest ally retreats, isolation follows. Here's what investigators miss. These nations communicate through the Bank for International Settlements. Their meetings increased, their actions synchronized. The pattern becomes undeniable when mapped globally. This isn't individual nations protecting themselves. This is coordinated repositioning. The dominoes lean together. The evidence points toward one outcome. Dollar dominance ends not with collapse, but erosion. When demand for treasuries falls, America faces brutal choices. Print more money and trigger inflation. Or raise interest rates and crush the economy. There's no middle path. History teaches this lesson repeatedly. Sterling lost reserve status gradually, then suddenly. The process took decades. The final break took months. The timeline accelerates now. By 2030, dollar usage in global trade could drop below 40%. That's never happened since World War II. Here's the fracture pattern. Mortgage rates climb toward 10%. Federal deficits explode past manageable levels. Social programs get cut. Military spending becomes unsustainable. The anomaly is public ignorance. Markets still price treasuries as risk-free. Retirement funds hold them as safe assets. The disconnect between perception and reality widens daily. China's exit isn't the cause, it's the catalyst. They saw the weakness and acted first. What comes next depends on one variable. How long can confidence survive when evidence contradicts it? The investigation ends where reality begins. The patterns converge on a single truth. China's treasury sell-off marks the beginning, not the end. Every indicator, from gold accumulation to payment system construction to allied coordination, signals the same message. The post-1945 financial architecture is being systematically dismantled. The dollar won't disappear tomorrow, but its monopoly already ended. Multiple reserve currencies will compete. Trade will fragment into currency blocks. America's ability to finance deficits through foreign lending terminates. History shows these transitions bring volatility, conflict, and unexpected winners. The nations preparing now will survive. Those denying reality won't. Watch for 3 signals. Treasury auction failures, sudden forex swings, and commodity prices decoupling from dollar trends. When these align, the acceleration phase begins. The evidence was always there. The question was never if, only when. China's actions suggest that countdown already started.